The market apparently delighted that Washington has secured trade frameworks, memos of understanding on trade with Japan and the European Union. Our guest says, though, the stock market rally is narrow, with gains concentrated in the old mega cap tech names such as Nvidia, and few large and mid cap stocks actually hitting 52-week highs this month. He says valuations are elevated, and we've also got inflation pressures driven by tariffs. So that sounds pretty cautious. Let's get more from Steve Rowles, Senior Portfolio Manager at TriVest Wealth Counsel. Thanks very much indeed for joining us. Sounds like you're wary of this rally, Steve.
Oh, hi, Andy. Yeah, it's been quite a ride here since April 9th, when we had the big pause and reprieve of the tariffs, moving to July, now August 1st. And of course, we've had some good news with some policy certainty with some tariff deals, and that's been momentum. We've also had the extension of the tax cuts. That's been momentum. And there's also been a lot of pressure on the Fed to cut rates. So that's been some momentum there, too. And last week, and the week before, we saw some strong earnings, especially out of the tech. But, previously, you're just talking about some of the earnings calls coming out today and earlier today, and there's been some concern over the total market. I think that this market is really concentrated in a narrow sector of the AI movement right now. And broadly speaking, I think that there's some concerns over the impact of the tariffs. The companies are not really disclosing what the impact of the tariffs are going to be because they don't know exactly what the rules are going to be yet. So some of those costs are not yet being passed down to the consumer. It's being absorbed by the exporter. So it's a wait and see approach type of market right now.
Because there has been criticism of these trade deals or trade accords we've seen in the past few weeks that we don't know how they're going to work. For example, Reuters has a story today saying that imagining that Europe is going to be buying these hundreds of billions of dollars of extra U.S. energy, maybe just a mirage.
Yeah, I'd agree with that. That's $750 billion of new energy. That's a lot of energy. If Canada was part of that $250 billion would be 10% of our GDP. So it all looks good on paper, but it's how do you get that across the line is a different question altogether. So there are a lot of concerns. Obviously, we have a lot of concerns back home in Canada. But yesterday morning was a great day, but throughout the day, we saw that there's some questions being asked about the European deal. So it's got to get ratified and it's got to get through the market. But these things don't happen overnight. The impact of tariff deals really take a long time. So we need to be a little bit patient here.
This will be a crucial week, though, won't it? Yeah, we've got the majority of the mega cap techs, Amazon, Apple, Meta, and Microsoft reporting.
Yeah, it's a big week. I think there's 160 of the S&P 500 stocks are reporting this week. So it's about 1/3 of the total market's reporting. So really focuses more on the guidance. Some companies are refraining from providing guidance, but those who are really are focusing on the impact of the tariffs. So let's really get through this week. There's a lot going on. Some key economic figures come out this week, which will really be focused on for the next few months. I think we get GDP, we get inflation numbers later in the week, and of course we get non-farm payroll at the end of the week. But the key focus for the week is really the Fed Reserve meeting on Wednesday and what the outcome was for that, and really where are there going to be any changes to the dot plot.
You have some stock ideas for us. Agnico Eagle would be one of your favorite ways to play gold.
Yeah, it is. It's we saw it last week in Newmont. I really like gold right now. It's because I really like math right now, and I think when you're looking at gold price closing in at all-time highs right now, and with all-in sustainable costs being about under 1,300, and if you're getting 3,300 on gold price, well, that's going to be very optimistic for gold stocks right now.
And why Agnico? I mean, the fans of the company point to its safe jurisdictions politically.
Yeah, safe jurisdictions. I like the cash flow. I like the margins, and there's a clear pipeline for growth there.
You broadly gold. Do you tell clients? Do you think investors should have, say, 5% of their portfolio in gold in one form or another?
I like to hold stocks individually. I love the fact that you can get yourself a dividend while you wait and get paid from multiple levels. So I prefer to buy stocks over buying gold directly. But I think that right now having a gold stock is great for a private wealth investor.
Alphabet is another stock you like. Investors were reassured by the numbers last week that its core search franchise doesn't seem to be eroding right now.
Yeah, very much so. Outside of China, Google holds 90% market share in search. We saw last week that the advertising is still paramount and still working very well. I think another key aspect of Alphabet was the fact that they're increasing CapEx by another $10 billion. So that means more AI technology coming through the pipeline there. I also really just like the entire company. I like the management. I also like the outlook for their Waymo auto driving system. It's phenomenal.
That's interesting. Do you think that will be a money spinner for them, automatic or robot cars?
I think it will be. I tested it out a couple of weeks ago. I was in Venice Beach, California, and I used it exclusively throughout the whole weekend. And just don't sit in the front seat and sit in the passenger seat, and you'll be fine. But it's a phenomenal service. I felt very safe, and throughout, it wasn't even something I thought about by the end of the weekend.
Really, you just got used to it.
Yeah, 100%. I felt very safe, very, very secure, and it's a great service. It's used in 5 cities right now, so I think that the